Stocks are kicking off November with a rebound this morning, coming off a third straight losing month. Investors still waiting on the Federal Reserve's interest rate decision that is out later today, though it's all but certain rates will remain unchanged. Investors are eager for any indication of the path forward for monetary policy. We want to bring back in Yahoo Finance's Jared Blikre to give us some insight on what we might expect this month. Jared?
Thank you, Diane. Nobody has a crystal ball here, but we do have historical tendencies, and maybe we can guess what the tailwinds or headwinds might be in the month of November. What I'm looking at here, I've showed this several times over the last month. This is the S&P 500 performance by month. September, which is this purple line, which has trended down since 1960, that is done. This other line right here, that's October, the cyan line, that is done. Now we are looking at orange, that is November. And since 1960, of the last 4 months of the year, this has been the most bullish. And then December, I would note, tends to be bullish as well. Now, of course, we do have to worry about exogenous factors. We have huge treasury supply coming online. We have a Federal Reserve that's still reacting to surging inflation, although it has been ameliorating. So these things can override seasonality. But nevertheless, historical tendencies tend to take place when the market has just kind of already made its move and is trying to find its footing. And that's where we are right now. So as long as Treasury yields, the 10-year, does not surge above 5%, I think we have a decent shot at rallying into the end of the year. Now, I want to make a remark on this chart right here. First of all, this is the S&P 500 performance. That is a purple line over the month of November. You can see it tends to surge in in the early beginnings, then it tails off a bit and it surges at the end. Now, this cyan line right down here, this is also the S&P 500, but that represents the third year of the U.S. presidential cycle. So a little bit more relevant to the time period in which we are. You can tell it actually trades sideways. It dips into the middle of the month and then it accelerates towards the end. And I do have a comment. This is by Almanac Trader. This is Jeff Hirsch writing over there on the first trading day of November. So that's today, is the fifth best of all monthly first trading days since September of 1997. And that is based on the Dow and its points gains. The Dow, S&P 500, and NASDAQ have all advanced 13 times over the last 21 years. But it gets a little bit better. Following a bearish streak from 2005 to 2011, all three indices have been up 8 of the last 11 years. So not surprising, I guess, that we are looking at an update today in the markets. Now, I also want to take another look at seasonality via the VIX. The VIX tends to trade inversely with the stock market. So when it goes up, that's times of fear. That's when we see stocks sell off. And what we see here, this purple line is where we have been this year. The cyan line is a historical average, and we've actually traced this out pretty closely this year. We got a peak towards the end of October. That was that slowdown in equities. That was that drop in equities. Seasonality-wise, I would have expected that a little bit earlier, but nevertheless, we got it here. And if history is any guide, well, we should drift lower in the VIX towards the end of the year. What does that mean for stocks? It means that stocks should have a bullish tilt into the end of the year, guys.
All right, Jared Blikre, all the data that we need going into the final 2 months of the year here. Jared, appreciate it.